Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, that is Anucauskas. Today is the 10th of June 2019, so welcome everyone. Welcome to this Monday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now the first one I want to touch on here is gold. Now I talked about gold last week, especially on Friday, and basically what I was saying that we're keeping a close eye on this potential retracement, and this is what we're getting this morning. Of course, the risk sentiment has improved, as you probably are aware, and yep, we're seeing a small hit here on gold. Gold is sliding, and of course, what we're still looking for we're still kind of aiming for a possible move higher later on. We're seeing this as a small correction for now, and this could in a way travel a little bit lower, but let's say if we draw a Fibonacci retracement here, then you can see where gold is right now. So it passed already its 23.6% retracement. It seems that it's aiming for the 32.8%. So let's see how it's going to play out. It is near this key area of support that I've talked about in one of my previous videos, and basically that's near this 1320 zone, so approximately there. So keep your eyes on this one. If this of course breaks, then we could see a deeper slide lower. We may see then a push towards the 50% retracement, but of course for now what we're going to do here is we're going to continue observing this one. We'll see if it actually reaches the 1320. If it fails to break below this, then yep, this could be a nice bouncing ground for gold to push back up again. Potentially we will aim for those last week's highs near this little area right here, near the 1347.5, something like that, approximately there. Anyway, you could round it up towards the 48. So 1348, that's going to be our nice target if we see a nice rebound here from this 1320 zone. So for now, this is where the commodity is aiming. Let's see if it actually holds here. If it fails to hold, then yep, we may see this one dropping not only below this key area of support near the 1320, but also below the 50 EMA here, shown as the red line, and then we could target the areas like the 1312, 1310, which previously acted as good areas of resistance. Now they could take the role of support, and if those fail to withhold, a slightly better area of support could be seen near the psychological 1300 level. But for now, let's not get ahead of ourselves too much on this one. Let's see what it wants to do here with this 1320 level, if eventually it reaches it. If it does, then yep, we'll keep a close eye and see if actually it can hold, if the 1320 level could hold. And just to also remind you that this is the 38.2% retracement on the Fibonacci. Jumping into a few pairs now very quickly, and the first one I wanted to really quickly touch on, and that's USD, US dollar against the Mexican peso. And as you are also aware of the news, so the Americans lifted their threat against Mexico and Mexican goods. So basically, you can see that the Mexican peso is strengthening on these news this morning, opening with a gap here, with a strong gap to the downside, and is now aiming lower. But I've looked at this one previously in one of my videos last week, and I was telling you guys, if we see a drop below this area right here near the 19.48 zone, then yep, we could see a potential slide to the downside. But the only thing is that we will consider for lower levels, but only up until this upside support line taken from the low of the 19th of April. So be very careful around here, because if this upside line holds, then we may see a nice rebound, a nice correction back to the upside here, and this will be very interesting to see if actually we will manage to fill this gap again or not. But for now, of course, it is holding its path to the downside. We are aiming lower, but only we're going to keep a close eye on this this upside support line, and then we'll see how it performs around there. Let me just adjust this very quickly. There we go. So we will see how the pair is gonna play around here. This is where it also could test this area right near the 19.04 level, which marks the low of the 30th of May, but the break here, the break below both of these could of course confirm a forthcoming lower low, and we could then target much lower areas. But let's not get ahead of ourselves too much. First, let's see what it wants to do with this upside support line. If it wants to rebound, that's going to be very interesting to see. And if it travels back above the 19.3180 zone, something like that, approximately there, then we may see a bit of this gap getting filled. Maybe not the full one, but maybe traveling all the way here back towards the 19.48 zone again, and then we'll take it from there. See what it wants to do after that. But like I said, for now we're not gonna kind of overcomplicate things here. If this of course travels back above the 19.62 zone, then yep, we will start aiming for higher levels again, at least towards these recent highs, and then we'll take it from there. AUDCHF. Now this is very quickly I wanted to show you. This is a very nice setup here. So we're waiting for a nice exit here, and so the Australian dollar against the Swiss franc. So let's see which way this is going to break out. For now, of course, it seems that there could be more chances to the downside, but like I said, let's wait and see. We need to see, in order to kind of, let's say, consider further declines here to the downside, ideally we would like to see a break of this 0.6895 level, or even better, a drop below the 0.6887 zone, approximately there. And just to show you what that level was here in the past, this level here acted as a good area of support here back on the around the 3rd of January. So good potential target, good potential level here, but ideally what we need to see here is a nice good close of a 4-hour candle before we could aim for lower areas. And by lower areas, I mean this level right here near the 0.6825, marked by the low of the 3rd of January. So sorry, the previous level was the intraday swing low of the 3rd of January. So this 0.6887 zone, that's the intraday swing low of the 3rd of January. If it gets broken, then yep, it could open the path towards the lowest point of the 3rd of January. In terms of the upside here, well, as you can see by the chart, we need to see that nice good break above this downside resistance line taken from the high of the 23rd of April, and ideally a nice good break in a close of the 4-hour candle above the 0.6950 level. This way the path towards slightly higher levels could be open. Then we will aim for the 200 EMA initially, and then but slightly above that we do have the 0.7015 area approximately there, which marks the high of the 14th of May. So for now, keep your eyes on this one. Let's see how this is gonna play out, and yep, wait for a clear break and ideally a close either through the upper side here or through the lower side. Jumping into euro dollar, so this pair is sliding lower this morning, and but as you can see, it's finding some good support near this 1.1305 level. So basically it's kind of still hanging around above the 113 level. So let's see if actually it can retrace a little bit more. Now I do have this scenario here in place, so basically we are still trading above this short-term tentative upside support line taken from the low of the 31st of May. If this continues to slide lower, we may see a test of this upside line, and then it will be very interesting to see if it actually holds. If it does hold, then this could be a nice bouncing ground for euro dollar, and we could see this one traveling at least back towards the last week's highs near the 1.1348 zone. But if that fails to hold, then yep, could see further acceleration to the upside. Now in terms of the downside here, in order to let's say at least consider some of the lower levels here, ideally we would wait until we see a drop below the 1.1250 area, approximately there, and this way also the rate could fall below the 50 EMA here, and then we could target some slightly lower areas like the 1.1190 again, which previously acted as a good area of resistance, and yep, this time could play the role of support. But also just wanted to quickly show you one thing as well, guys, and for this one I need to jump into a daily chart. If we see a push higher, and if we see this scenario working out where the pair will, let's say, rebound from this upside line and breaks above the 1.1350 level, then keep your eyes on this little tentative downside resistance line here, taken from the highs of the 15th of February 2018. So as you can see, it is touching here a few of these peaks here, of the peak of March and the peak of April, and this is where it could the rate could stall around here. So if we see this one pushing higher all the way here to the upside, this is where, like I said, this is where the rate could stall initially, and we'll take it from there, see what it wants to do. If it wants to retrace back down, that's good news for the bears. But if this gets broken, if this downside line gets broken, then well, we may see larger extensions to the upside here in the near term. So for now, be very careful with that. Still keep your eyes on this little short-term tentative upside line, just in case this decides to fall further down below the 1.13 level. And the last pair very quickly on for this session, that's USDCAD. Now looking at this one, and I talked about this last week. Basically I was telling you to keep a close eye on this long-term upside upwards moving trend line taken from the low of the, well, it's between the 31st of January and the 1st of February. So from that area, basically from those lows, this long-term upwards moving trend line has been broken. As you can see, the pair stayed and closed the week below this. Of course, this doesn't create this nice positive atmosphere here right now, so in fact it creates a more negative one. So but of course we're not excluding a possibility of seeing a small correction here to the upside up until this little downside resistance line. Let me just adjust the peaks here a little bit because it has moved, it's skewed a little bit here. So basically this is what we're going to be looking at here. And we may see this one correcting back to the upside a little bit, maybe testing the 1.33 zone, maybe just slightly above that, overshooting it. But if this, like I said, if this downside line continues to hold, then we may see another leg of selling here. So be very careful with that. If it doesn't travel higher and decides to drop straight away lower, then keep your eyes on this 1.3245 level. Previously acted as a good area of support, as you can see here, back on the 19th of March. And last week as well. So it kind of didn't, it almost reached it last week, but this morning you can see this little opening, kind of this little Sunday candle here, but very interesting. So almost managed to reach this level as well. But if this, let's say, decides not to retrace higher and decides to drop straight away, then yep, keep your eyes on the 1.3245. A break below that would confirm a forthcoming lower low, and we could then aim for the 1.3208 zone, which previously acted as a good area of resistance back here on the 28th of February. So keep your eyes on this one. for us, let's say, to aim higher on this one, well, it would need to travel a lot to the upside here before we could actually get comfortable with higher levels, and ideally we would like to see a push back above this long-term upside support line, and then of course ideally a push back above the 1.3370 zone. So, and only then we'll consider higher areas again. For now it's nowhere near that. It's looking more towards the downside, but again, yep, we may see a small correction here to the upside before another leg of selling. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end, and if you want to join me later on at my Traders Tea Time, as always, that's 13:15 GMT time. But for now, I hope you have a wonderful trading day, and I'll see you later. Bye bye.